Hello my dear children, welcome you all for my YouTube channel. This is my YouTube channel, Let's Learn Commerce with Minoshina Nakkara. Right, so then today I specially designed this video because you all know that your O-level examination is nearby, like a few days more to go, right? So I know that most of you are like now anyway have done with studies and started to do the revision and the things like, and but I know like you all are having like in a very stressful situation right now. So I thought of like discuss around 50 questions, but like I have to tell this like it is not to cover the whole syllabus, but at least like I try to give you a small help to revise the things you have learned, and some special concepts in both business and accounting. Right, so let's start with the very first thing. So I selected the most easiest but like most commonly asked question. What is a business, right? So in your question paper, if they ask what is a business, how we are going to define it? What is a business? A business is an organization, you can say, that produces goods and services to fulfill human needs and wants. So when you are defining the business, those key terms should be there, but it's not says that you have to write perfectly the exact words what I have mentioned. Like you have to, but like you have to make sure that key terms. What are the key terms? That is an organization, right? Or even you can tell an entity, right? But the other words like needs and wants, fulfilling needs and wants, right? And provides good and services. Right, then since there are some like the important terms are there, so I know you all know about the difference between the goods and services. So goods are physical things, tangible things but we can see, but services are intangible, and goods we can store and use it later, but services we can't store and use it later, right? And also like another main characteristic, service you cannot separate the service from the service provider, but goods you can. Now as an example, now I'm giving a service here, right? So if I'm not here, you can't get my service, the exact service what I'm giving here, my lesson, you can't get if I'm not here. So like that, right? Okay, so that is about the business, right? The next, like if they have given you like a question like state two business objectives, right? Now when it comes to business objectives, the objectives are like long-term goals which businesses are like aim to achieve in the long run, or there are short-run objectives as well. So basically when it comes to the business objectives, you can talk about profit maximization, profit satisfaction, or like simply you can talk about earning profit, right? Because majority of the businesses in the world, their objective is to earn a profit, but there are not profit organizations as well, so they have other objectives other than making profit. So you can talk about satisfying customer needs and wants as an objective, or increase market share, okay, achieving business growth. So any of these you can write as a business objective. So I hope it's clear with you, right? Then if they ask about the profit, what is profit? Because profit is also like one of the common question and easy question they are asking, but still like students, they like they're confused with this, because like they know how to properly calculate the profit even like by step by using the P&L, but when they ask what is profit, they don't know how to write a proper like explanation for that. So profit, simply you can tell profit is the surplus, right, when the total revenue is more than the total expenses. So what is the formula to calculate the profits? That is total revenue minus total cost or the expenses. Okay, right. Then we'll see what is production, because production also one of the major topics we are talking about. What is production? So production is simply it's a process of creating a creation of goods and services to satisfy human needs and wants. This production is a process, children. So in every production process, there are 3 steps. What are those? In a production process, in each and every production process, there's input, then the process or the steps and the output. Right? So now as an example, I'll go with accounting process. Then it's easy because it's anyway relevant for you, no? So in accounting process, we always talk about the inputs are what? Transactions, right? Then the process is the steps of converting these transactions, these inputs to the output. So what is the output of accounting? Profit and loss statement and the statement of financial position. Then what are the process, the steps of accounting? That is, like if we start with one by one, like I know that you're already familiar, right? The first we have to record the transactions like in prime entry books by using source documents. Then next step is to just transfer this into the ledger accounts. Then we have to balance ledger accounts. Then by using those balances, we do our trial balance. Then by using trial balance, we do P&L and SOFP. So if we just take something like a production of we say something, okay, a shoe. So what are inputs? What they put? The rubber, okay, and other glue and those type of things they put, right? And the process is how they converting those things into a shoe, right? Some cutting, like pasting, all those stuff you can talk about. If it is a cloth, the product inputs, again the clothes, they use the buttons, the zippers and all those type of things, the materials they used, right? Then what is the process? First they cut, first they keep the design or whatever the thing they have, then they cut, after that they stitch, then they put some other things there, then like that it goes, right? Then the next is, most of the time they ask about the production factors. What are the factors of production? So you all know there are 4 factors of productions. What are those 4 factors of production? That is land, labor, capital and enterprise. Okay, or sometimes we say entrepreneurship. Land, labor, capital, entrepreneurship, or land, labor, capital, enterprise we can say. So entrepreneurship, basically in your syllabus we use that term, right? Okay, so then what is land? So land, that is all natural factors, right? The land. Natural factors means the things you are getting from the nature, right? So that is comes under land. Then labor, it's a physical and mental contribution towards some process, right? So what is that? So there are like mental contributors. They contribute like they are mentally contribute towards a business, right? They are giving ideas, and like the professional accountants, lawyers and architects, they are giving their knowledge to the business. But there are people, they are giving the physical contribution. So the people who are giving the physical contribution, we usually say like these people are like some hard workers, okay, right? So anyway, these people comes under labor. Then capital, all man-made resources we use to do our production, like machineries, vehicles, furnitures, any man-made resource comes under capital. Finally, but not, it's last but not least, the most important factor, entrepreneurship. Entrepreneurship or enterprise, so that is called that basically the person, right, who manage other 3 factors of production, taking a risk and do innovations, right? That person is called entrepreneur. So without having an entrepreneur, there's no business, right? So entrepreneurs are always, we are telling they are having if they ask about entrepreneurs' roles, we'll talk about them as risk takers, okay? They are innovators, right? And also they are managers. They work as managing all other factors, right? So, and also they are the ones you organize all the stuff, organizers, right? Decision makers, we say for them, right? The roles of entrepreneurs: decision makers, organizers or managers, innovators, right? Risk takers. Like that you can explain about the entrepreneurship. And when we talk about these 4 factors of production, it's better to know about their returns. So all these 4 factors have their returns, right? So land, what's the return? That is rent. Then capital, interest. Okay. Then labor, that's salary. Okay. Or wages, you basically say salary. Okay. So then the entrepreneurship, that is profit or loss. Okay. Basically we say profit. Okay. Right. So that's about that. So then if they ask about entrepreneurship again, you can define entrepreneurship. They are like the people who are able to organize the resources and take a risk to start and manage a business. Okay. Right. Then I'll move towards some other important business organizations, the forms of business organizations, right? So first we can start with the sole proprietorship. So you all know, if they ask about sole proprietorship, that is a business owned and controlled by a one person. So if they ask about the characteristic of sole proprietorship, like it's owned by a one person, right? And that person has invested the capital. If there's a loss or if there's a profit, that person has to bear it up alone. If it is a profit, he can enjoy the profit alone. If it is a loss, that person has to bear it up alone. But if you talk about the advantages of sole proprietorship, you can tell that owner can enjoy the profits by himself, can make quick, independent decisions, can keep the control with him, right? And can start the business easily, right? So those type of things you can talk about advantages. But there are disadvantages in sole proprietorship. The one disadvantage, as you always says, if there's a loss, he has to bear the loss alone. And sometimes the decisions he makes, those decisions are not always correct decisions, because it's like he makes it alone. There's no other contributors, no, right? So that thing also you can highlight. And also it's really harder for him to expand the business because of less capital, because he is the only person invest capital in that organization, right? And now this for both partnership and sole proprietorship, you can tell some common characteristics. Those common characteristics, you even can talk about the common disadvantages for both. What? Like of unlimited liability. Okay, I'll explain that in the next question. What is unlimited liability, right? And also there's no legal status for these two type of business. What is legal status? That means like these business types like sole proprietorships or partnerships, like they are usually not accepted as a separate legal person. Okay, like separate from the owner. So what is the disadvantage of that? Because of that, they cannot make any agreements or the sole proprietors and the partners. And even if they want to buy some assets, they have to buy it by their own names, not by using the business name. Like when they go for a loan and all, they have to go for personal loans, not the business loans. So those are actually negative effect for that. And even when it comes to taxes, right, that sometimes that they have to pay the taxes also as their personal income, from their personal income, right? So then those things we can talk about the common disadvantages for both. So then I skip that. Know what is unlimited liability or the limited liability, right? So there might be a question they ask about what is unlimited liability. Okay, so unlimited liability means, okay, the owner's liabilities go beyond what they have invested in the business. That means it's go beyond until their personal belongings. Sometimes if the business bankrupted or business is owe some money for an outsider, okay, they have to sell their personal assets and settle those loans. Okay, so that is risky for owners if there's unlimited liability. So limited liability means the owner's liability, so they are only liable up to the amount they have invested. So where you can say limited liability, that is there in limited liability companies. So you know two types of limited liability companies are there, private limited companies and public limited companies. So same time, I'll ask another thing from you, right? So do you know the difference between the private limited company and the public limited company? I think yes, right? What? Private limited companies, they only can issue shares among the known people. They cannot issue shares to the public, general public. But public limited company, they can issue shares to the general public. That means they can issue shares to the stock, they can issue shares like in stock exchange. Okay, right. I hope now like you have some sort of like understanding about these things. This is again, I have to tell, this is a quick, a rapid revision session, right? Okay, we'll talk about what is marketing and we'll go for marketing things. So what is marketing? Like when it comes to the marketing, you can tell marketing is like identifying, anticipating and satisfying, right, customer needs in a profitable manner. That is called marketing. So when it comes to marketing, we cannot forget about 4 P's or the marketing mix. What is this? The 4 P's you already know, the marketing mix. It starts with P. All 4 starts with P. Product, place, price and promotion. Right. So what is product? Product is what? That is, you can talk about when it comes to the product, it can be a physical good or a service, or even sometimes we think about the ideas, anything they are selling, that is comes under products, right? So if they ask what are the variables under the product, the elements under the product, you can talk about quality, like then brand names, packaging, those things comes under product. What is place? Place basically talk about the distribution. It includes physical place as well. Basically mainly the distribution channels, how you distribute your product or service to your end consumer. So there are like 3 main ways: direct distribution or indirect distribution. Direct basically if it is a perishable good, okay, like what we can say sometimes a perishable like fish or like fruit kind of thing, most of the time the owner try to sell it by himself, okay. And also if that is like high value items, highly expensive items, also owner try to sell by himself without using intermediaries. So that is called direct distribution, no intermediaries. Producer to consumer directly, so that is fast. And also like producer can get, like have a close relationship with customer, no? So can get like reviews directly from the consumer. And also they can sell it for cheaper prices, that because that intermediary commissions are not there. If they use intermediaries, they have to give them a profit margin as well, no? So then the prices will increase, right? But this is not practical all the time, because why? That if producer starts to sell everything by himself, he cannot concentrate on the production then, and also he only limited up to a certain physical location. But if he can use intermediaries, so who are intermediaries? Can be retailers, wholesalers, and especially agents. If you like sell for overseas countries and all, for foreign trade, you can use agents, right? But when you use them, you can expand your distribution, you can save time, and you can use that time for some effective production. But same time, the disadvantages, it can sometimes damage your reputation, because those people sometimes damage the quality or the brand name of the product, right? And you cannot directly keep contacts with the consumers, okay. So those type of things are their children, right? So that's simply about the distribution. So that is comes under place. We talk about product and place. Then price, it's about the listed price, discounts, and also like other payment methods like credit card payments, those things comes under price. So price, that is important. We say this is the only element in the marketing mix which generate an income for the marketer or the seller. Why, children? Because you already know that, right? So when we talk about product, place, promotion, for all these three marketing elements, we have to spend money. For product designing and all packaging, we have to spend money. Place also, distribution things, you have to spend money. And even the physical location to design it, construct it, for all those things you have to spend money. And finally for promotions, that is somewhere we spend a lot, right? For advertising, personal selling, everything, we have to spend money. So all those money you have spent, the only element where you can cover your cost is called price. So the pricing part is very crucial, very important. So there are a lot of pricing methods, but in your syllabus you are not learning those. But like all marketeers, they try to cover their cost through this. So when they set the price for the cost, they always add a profit margin. Then only the selling price comes. You already know that, no, in manufacturing accounts we discussed that, right? Okay, so that's about the variables of marketing mix. Okay, then in marketing, the other important key term is called the target market. What is target market? You know, children, the marketeers, now if you are a marketer, if you are a seller, like no one can, fulfill all the consumers in the world, right? Because of the limited resources they have, limited time they have, they anyway cannot fulfill all people's needs and wants. So you have to select a specific area where you can, satisfy like them in a highly attractive and a profitable manner. So my target market here, the O-level students who are going to face to their O-level exams this year, right? That is my target market. So like I specially designed this for that target market. So like that, everyone has to select a specific target market to sell their goods and services. Okay, right. Then the next, I think it's better just to know about these external factors which directly affect for the business activities. So when you talk about this external environment or the external factors, children, there are political, economical, environmental, social, right, factors which affect the business organization. So you need to know at least 2 factors under each environmental factor. That means, as an example, if it is economical environment, what are the economical variables, the factors which affect the businesses? You can talk about inflation, interest rate, exchange rate, etc. So if it is environment, how environment affect natural disasters like rain, right, flood kind of things you can talk about. And if it is technological environment, I forgot it, technical or technological environment, new technology, artificial intelligence, e-marketing things, those things you can talk about. So any example from the outside environment, right? And legal, the laws and regulations, that laws simply, about these consumer protection laws, those things you can talk about there. Right? And the same time, if they ask about what is consumer protection, so actually that means saving, actually, or protecting the consumers, the measures taken to protect the consumers from unfair trade. So if they ask examples for unfair trade, what you can tell? Selling expired items, misleading consumers by some faulty information. So those things we say as the unfair trade. Right? So if you are as a consumer, if you experience this type of unfair trade situations, you can simply go and complain to Consumer Affairs Authority or Consumer Protection Authority. You can go and complain them. Right. Okay. Now then, we'll quickly move to discuss about some accounting questions as well. Okay, so what are these accounting, like, basic accounting questions you need to know? Okay, before that I forgot one thing. You have to be like, at least have a certain knowledge about this e-business, electric business, or like, and e-commerce things, because these days now AI and everything we talk about all the time about artificial intelligence and all. So new movements of the businesses, you have to be aware about how businesses use the new technology. So simply how businesses trade using internet. Okay, right. So then when it comes to the accounting, so basically if they ask what is accounting, you can say the accounting is a process of recording, classifying and summarizing the financial transactions, right? And what is the main objective of accounting? Provides financial information for business stakeholders for their decision making, right? So how this information they are given? Through P&L and SOFP. Okay, right. Then other than that, that is the basic accounting, the main objective of accounting. Provides financial information for stakeholders for their decision making. But there are other accounting objectives as well. That accounting, one objective is like, the businesses to measure their operative efficiencies, whether they are earning profits or loss. The business has to get to know about the financial position of the business, and also to fulfill the legal requirements. That is also an objective. Why legal requirements? Children, for certain businesses like private limited, public limited companies, it is compulsory for them to do proper accounting, and also they have to get an auditor's report as well. They have to, like, every year they have to go through an audit process, and this third parties has to sign and confirm their accounting processes are accurate. Then only they can issue that to decision making process, right? Okay, then when it comes to the accounting, now like I just talk about some, like, accounting terms. You all know about the 5 elements of accounting, know how this ledger is like divided into parts, that is assets, expenses, equity, liability and income, right? So I'm not going to talk about the double entry principles and those things here, because there are enough videos we have done for that. Okay, but like another question, basically they are asking about the dual purpose of cash book sometimes, or dual purpose of petty cash book or bank account, because when it comes to these prime entry books, like these 3 prime entry books, cash book, petty cash book and the bank account, they are dual purpose. What is this dual purpose? They act as a ledger account as well as a prime entry book. We can say it's in other way better. They act as a prime entry book as well as a ledger account. But for both you can use one book or one journal. That is called their dual purpose. Right. Then if they ask what is assets, what is liabilities, what is equity, you need to know the definitions, right? So assets, we usually say the resources owned by the businesses, right? And is generate future income, the characteristic of assets, no? Those are owned and controlled by the businesses and is generate future cash inflows to the businesses. Okay, those are resources owned and controlled by businesses and is generate future cash inflows to the businesses. Okay, then if it is liabilities, other way around. Those are owed, like the things owing, they have to pay it in future. So that means in future it's not gives an economic benefits. Like in assets we said future economic benefits is generate, but in liabilities we say when they settle it, the cash go out from the business. So equity simply, that is the owner's ownership towards the business. So the same time, when it comes to the equity, children, now there are 2 equity accounts, only 2 equity accounts in the ledger, capital account and the drawings account. So capital account we take as a positive equity account, drawings account we take as a negative equity account. Why? Capital, the owner, the capital represents the money or any other assets invested by the owner. So if so, that owner's equity go up. Drawings means the withdrawals of the owner. The owner has used business money or any other business asset for his personal use. So that thing we indicates by drawings. Right? Okay. So I think up to now everything clear for you, right? So I'll just add some few things here. Now if they ask about the depreciation, what is depreciation, children? We only depreciate which assets? Non-current assets. Yes, only the non-current assets we depreciate. So that is actually the cost of the assets, the value of the assets is decreased with over time. That is called depreciation. So only depreciation method in your syllabus we learn, that is called straight line method. So that's another point you have to keep in your mind. So in your questions, if they ask you to depreciate a certain asset using a straight line method, that is the only method you know. So don't get scared, don't get panic when you see the word straight line method. So only you have to do, get the cost, put that into that percentage they have given and get it as a depreciation. That's all. Then when you put that into SOFE, you go to the trial balance, check whether they are accumulated depreciation. You just get the total and put that into SOFE. Right. Then another thing, if they ask about to you to define what is profit and loss account, that is simply an account. You can say prepare to calculate the what is that called, the operations, business operations, the operational results of the business in a certain period of time. That means profit or loss. If they ask about what is SOFP, it shows the financial position of the business. That means assets, liabilities and equity, right? If they ask about what is inventory, inventories are goods held for resale. So inventories are goods held for resale. You know what is that, right? So if my business is a stationery shop, all the stationeries comes as my inventory. If my business is a furniture shop, furnitures are my inventory, like that. Okay, then what is a net profit? Net profit means gross profit minus expenses, or the ultimate main profit of the business after reducing all expenses from gross profit. Right. Then what are or who are bad debts? Bad debts means debts that cannot be recovered. Why we cannot recover bad debts? There are reasons. One reason, that person can be passed away, died due to some reason. So you cannot get that money back. Or that person has migrated permanently without informing. So something like, legally bankrupted. That court has made an order and saying that person has legally bankrupted, so you have to bear up the cost. That is called bad debts, irrecoverable debts. Okay, right. Then what is a bank reconciliation statement? That I want to highlight here, because if they ask about what is a bank statement and what is bank reconciliation statement, you always get mixed up, right? So bank statement is a statement which sent by the commercial bank of a commercial bank to the current account holder, which indicates all the transactions that person has done through his current account throughout that month. So every month end, all the current account holders receive this from their respective commercial bank where they operate their current account. That is bank statement. Bank reconciliation statement prepared by the business. So why they prepare bank reconciliation statement? They want to show the difference between the bank account they prepare, the business prepare, and the statement which the bank sent to them. If those two are not tally to each other, they prepare this reconciliation statement to show the difference. So you have to know this difference properly. Then what are accruals? What are accruals, right? That means accruals means the things which not yet received or not yet paid. Accrual expenses, those are the expenses you still not paid. And accrual income, the income earned but not yet received by cash, right? So these accruals we have to consider, and prepayments we have to consider when you do P&L. What are prepayments? Prepayments and any expense you paid in advance for next year. So usually accruals you have to plus to your expense they have given in trial balance, if there's any prepayments actually rarely given. So if there's any prepayment, you have to reduce that with that expense they have given in trial balance. So finally, in case if they ask about bookkeeping somewhere, there's a difference between accounting and bookkeeping, children. So accounting, you already know, it's a big process of identifying, interpreting, classifying, everything includes there. For bookkeeper, they just systematically record financial transactions. So first step of accounting is bookkeeping. They are simply record transactions, that all. After that, all other processors usually do that. That is a responsibility of an accountant. So that's the difference, right? So hopefully I think you have understood the certain, like important areas of your syllabus. So I wish you all good luck for your exams, and if you have any questions, you can just comment, then I'll try my best to provide you the answers. Thank you for listening and watching.